Welcome to the jungle, folks. That's right, the South Florida insurance market, premier protection style. So here's my January 2024 update. I don't have a lot of good news except for this agency continues to think out of the box, right? And that starts with anything from replacement cost values all the way to negotiating with your lenders. The market itself has not brought us much in the aspect of price change and prices coming in. That's the issue. So if you don't have prices coming down in the insurance market, and I'll explain why in a few minutes, then you still have to work with an agent that focuses on the clients and not commissions. And that's what we do here at Premier Protection. We understand the reason you own commercial real estate is for ROI and net operating income, not to spend a fortune on insurance policies that you may or may never, you don't need until there's a real emergency. And if you're in the luxury homeowners world or the condo world, again, same situation. The market does not look good. If you are out there shopping for new property, whether it be commercial or residential, the key is 2002, year built. That is what the insurance companies are favoring. We have plenty of capacity and plenty of decent rates for construction 2002 or newer. Below that, it's still somewhat of a disaster. Now, why? Why? Because the main construction codes, the rebars, the roof straps on commercial and residential construction changed in 2002, and that is what the insurance companies favor and give the lower rates to. So whatever capacity we do have in this market, that's always favorable, it's competitive, and the carriers are actually fighting for that. So keep that in mind, when you're buying property. A 1986 5,000 square foot house on the water, in East, Palm Beach County could cost you as much as $60,000 to insure, where a 2009 or 2023 home at the same values could cost you $15,000 and will offer you more coverage like water damage and sewer backup, which they're removing. The good news in the state of Florida when it comes to the general liability side is we are seeing less litigation and less lawsuits in the general liability world. Ever since our governor, did some insurance reform, and I know a lot of consumers did not like it because it looks like it favors the insurance carriers, but it gave insurance carriers, more rights when it comes to property security laws and wrongful deaths, assault and battery. We've seen claims where there is, an assault and battery in a parking lot of an apartment building. The tenants don't even live there. And all of a sudden when someone gets hurt, who's responsible? The landlord. Well, now they have to prove landlord negligence. Prior to that, Florida security laws said the landlord must keep the property safe, regardless if you're a tenant or not. So we are seeing a relief in that world. But here's the funny thing. Over the last 12 months, 24 months, property rates went through the roof. But now I'm seeing liability rates start to tick up, right? So there's really not a relief in insurance markets. Now we do have more capacity than we did last year, and there are a couple carriers that have entered the market. But again, let me just say solutions. The best choice and the least expensive is Citizens, whether it be on the commercial side, wind-only policies east of 95, or multi-peril west. It is always the least expensive. Now, let me also say that there is some things on the horizon that are being done by our government. Since Governor, DeSantis decided not to run for president this week, he did throw another bill on the floor of Congress. It's property tax relief for those with homesteaded and homeowners that have experienced double-digit insurance increases over the last 24 months. He's giving around a 7% relief in property taxes for those homes that are assessed at $750,000 or less. Now, I know that's not going to help everyone in the commercial world, and not everybody's home, but it is some relief. There's another senator out there that lived through Hurricane Ian on the West Coast who proposed that Citizen be the number one insurer for all wind in Florida, and we devote an infrastructure of municipal bonds and taxation to support that. Why did he do that? Because when his home got hit by a hurricane, he had a very difficult time getting paid by insurance carriers. And I've said that a lot. That's standard operating procedure by insurance carriers. And I know I'm an independent agent and I represent them. But in my experience, certain claims over $100,000, standard operating procedure is they will litigate and fight versus pay the claim. On the other hand, our government insurance, Citizens, is quick to pay. In fact, we have a client who bound a policy on an 88-unit apartment building. A week later, got a lightning strike that took out his elevators. And guess what? Citizens cut him a check literally in less than 30 days for over $128,000. So for those of you who say, Citizens, is it a real carrier? What does it do? All those things, will it pay? The answer is yes. It may not be rated, but it is accepted by banks and it's backed by the power of the state of Florida. And again, if you ask me what this market looks like 2, 3, 4 years down the road, I've always said over the last couple of years, we're moving towards a government insurance market in the state of Florida. It already exists for certain types of policies in California or fire in Colorado, things of that nature. And for you commercial investors that are not in Florida, almost every state is offering some type of government insurance. Again, the problem is most agents will not engage in it. They will not negotiate with your banks, to save your ROI. It does exist, but government insurance doesn't pay a hefty commission like the open market carriers do. So the updates, they're not very good. I will share a little bit of light on what's going on in the insurance industry after attending a recent convention in the reinsurance world. They're all basically showing us graphs of things like from 2000 to 2017, the average cat loss in the United States was roughly $18 billion a year. From 2017 through 2023, the average cat loss is $75 billion a year. Guess what they're blaming it on? Climate change, rising water levels, all of those things. So they show the graphs of rising water levels. They are measured, they are real. They show the climate changes and things like that. And now the insurance industry is also moving to a new model, NS23, which has 40% more analytics on catastrophic losses. So they're predicting almost a 40% increase in catastrophes or cat losses, hurricane, major fire, tornadoes, and things of that nature due to climate change. So that's really it. So I know you need solutions. I know you need insurance rates to come down. That convention, they're talking about a generational shift, right, in insurance, really never retracting to previous levels. So we need to prepare for this. It will affect the price of property. It will affect the price of homes for sale, commercial properties, cap rates, all of those things. So it's not a good update. There are solutions. We here at Premier have been engaging them and saving our clients hundreds of thousands of dollars. We do have some new markets, especially for 2002 or newer construction. Again, if you get depopulation letters from Citizens, I highly encourage you, if you can stay with Citizens. And the last comment I'm going to make is on interest rates. So obviously, all of us, especially in the commercial real estate world like myself, we're looking for interest rates to retract, or even in the residential real estate world, interest rates to retract. The Fed said possibly 3 this year. I don't know. I think 2024 is going to be a very messed up year. Why? Number one, you have the elections, right? So that will have some influence. But as most of you know, I'm a previous Wall Street guy. If you look at the economy, right? And right now we're in the middle of earnings season for the Fortune 500 and the Fortune 100 seasons. The consumer is strong. Unemployment rates are down. Inflation supposedly is under control, right? Companies like Chase Manhattan reported earnings this week. Well, they reported record earnings. The only thing bad was their commercial real estate defaults, which, that has to do with rate resets and insurance. But for overall, all the indicators, right, including the S&P 500 breaking new highs in January of 2024, don't show any reason to cut interest rates, right? The federal government historically uses interest rate cuts for what? to stimulate the economy. Well, I don't see an economy that's, doing so bad, right? That they need to lower interest rates to increase things. I mean, to give more liquidity to the market, get people borrowing money and things of that nature. I just don't see it, right? And the other news with this is, good news, is the balance sheets of the large insurance companies, the reinsurance companies, and the Fortune 500 companies have a high interest income, right? So when you're sitting with cash in your balance sheet waiting for a recession for 12 months, what happens to that cash at earning 5% or more? It keeps, right, increasing. So you're seeing more robust cash in balance sheets of large companies. What does that do? It adds liquidity to the market for expansion, not to mention AI and productivity. So again, that's my January 2024 update. You still need the same solutions. We need to be very careful of the year built that you're buying property in Florida. You need to be very picky on the lenders that you choose. And yes, I have secured multiple new lenders, one or two being a life insurance company with loans up between 20, 30, 50 million. And yes, they'll do $5 million loans that will waive wind. Yes, waive wind on 90% of the properties that they will insure. So again, here at Premier, we're constantly looking for solutions to think out of the box and deliver them to our clients. Why? Because that's what we're here for. We don't sell anything we don't buy, and the majority of us own real estate. So that's my 2024 update. Let's have a great year, and we offer the solutions. Feel free to reach out and call me anytime. DM me, text me, you got it. Looking forward to a great 2024. Thanks.